Okay, so the last couple of days were a complete roller coaster for crypto. I was basically scrolling through Twitter with popcorn watching the drama unfold. Let's take a look at the latest update on this whole FTX situation and what's going on the market. But before we do that, let's discuss how it all started. Sam Bankman-Fried graduated MIT and then he was working for Jane Street Capital, which is a trading company. And in 2017, he set up his own company called Alameda Research. He became a billionaire by doing Bitcoin arbitrage on the difference in the markets between US and Japan. And in 2019, he founded FTX, which is the crypto exchange. The FTT token issued by the FTX exchange was climbing at a high pace, and even I was thinking of investing in it at some point, but thank God I never did. At the peak, the valuation of FTX reached $32 billion, and they were doing all kind of promotions with a lot of celebrities that involved the likes of Tom Brady, Stephen Curry, and even Kevin O'Leary.
If there's ever a place I could be that I'm not going to get in trouble, it's going to be at FTX.
They were even bailing out at some point some major crypto players such as BlockFi, which is a crypto exchange, and then crypto lender Voyager that were to go bankrupt, and they poured in millions of dollars to save them. But how a company valued so much and being the second largest exchange at the moment could collapse in a matter of days? It's just a theory and nothing is 100% confirmed, but let's take a look at the sequence of events that, in my opinion, led to this situation. On November 6th, CZ, which is the head of Binance, which is the largest crypto exchange in the world right now, tweeted that as part of Binance's exit from FTX equity last year, Binance received roughly $2.1 billion equivalent in BUSD and FTT token. And due to recent revelations that have came to light, they have decided to liquidate any remaining FTT on their book. On the day before, they actually moved 23 million FTT tokens worth about $584 million at the moment. And he also pointed out that liquidating FTT token is just post-exit risk management, learning from Luna. But what stands out for me in this tweet is that we won't support people who lobby against other industry players behind their backs. So what did he mean by that? Well, SBF has been known to donate a lot of money to politicians, especially in the midterm election, where he donated about $40 million. But why? Well, supposedly he was lobbying for some crypto regulation known as the BIT license for DeFi, and that drove some public speakers that are known in the crypto space completely bananas.
You know what? We are tired of people that look like this guy trying to run stuff. I don't represent the people, the fuck I don't. I'm the one who does. It's me. I'm the one out here putting the work in behind the scenes trying to save crypto while these devils, Sam Bankman-Fried, Brian Armstrong, they're trying to permanently ruin it. This is not about money for me. I hope you guys understand this. I'm here fighting for you. This guy with these freaking glasses on, this douchebag, is out here trying to tell you that only the suits know what to do. Only the suits. Only the people who have all the money. They're the ones who can determine what happens. No, our bill is for the people. And you're going to find this out. We've got the funding for it, and it's coming out.
Now that was sincere, and I definitely felt that. And to that, SBF replied that a bunch of unfounded rumors have been circulating, and FTX keeps audited financials, and though it slows down sometimes on product, we're highly regulated. And he also retweeted the post from Caroline, which is the CEO of Alameda Research, that says that they have over $10 billion on the balance sheet. But 2 days later, on November 8th, he actually made this tweet. Hey all, I have a few announcements to make. Things have come full circle, and FTX.com's first and last investors are the same. We have come to an agreement on a strategic transaction with Binance for FTX.com, pending due diligence, etc. And literally 6 minutes later, CZ tweeted, "This afternoon, FTX asked for our help. There is a significant liquidity crunch. To protect users, we signed a non-binding LOI, which is letter of intent, meaning that they have intention to help them, but it's not obligatory and they're not supposed to do it. It's just the beginning step. And intending to fully acquire FTX.com and help cover the liquidity crunch. We will be conducting a full due diligence in the coming days." Which is funny considering that 2 days earlier he tweeted that they have no intention of helping somebody who's lobbying behind their back. And that same date, CZ also tweeted, "2 big lessons. Never use a token you created as collateral, and don't borrow if you run a crypto business. Don't use capital efficiently, quotes, have a large reserve. Binance has never used BNB for collateral, and we have never taken on debt." And then the next day, like literally the next day, how can you do a due diligence in 1 day? I think at the point when FTX or SBF, whoever, reached out to Binance or to CZ personally maybe, they already knew what's gonna happen, and that due diligence was just I don't know, I feel like it wasn't even needed because you cannot do due diligence in just under 24 hours for a magnitude that big. So Binance tweeted, as a result of corporate due diligence, as well as the latest news reports regarding mishandled customer funds and alleged US agency investigations, we have decided that we will not pursue the potential acquisition of FTX.com. So at this point, I think FTX and Sam Bankman-Fried are in big trouble. So why was there a liquidity crunch? When FTT first entered the market in the mid of 2019, the price of the FTT token was between $1 and $2. But then at the end of 2020, the price skyrocketed. And the reason for that is because the user base was growing, because they were doing a lot of promotions, and the price of the token was climbing up, because if you were to use FTT token, you would get a discount on trading. And there is nothing wrong to use the capital that you raised from the ICO, but the problem is that their balance sheet consisted mainly of FTT tokens that were basically printed out of thin air, and they were also used as collateral for leverage that they used, and they used a lot of leverage. And according to some leaks, as of June 30, Alameda Research, which is the sister company for FTX and basically under the same owner, which is SBF, they had about 14.6 billion worth of assets, and out of those assets, 3.66 billion were unlocked FTT tokens, and the other 2.16 billion were the FTT collateral, and that in total was about 5.52 billion, and that's a lot. That's basically almost half of their balance sheet. And 7.4 billions of liabilities mainly consisted of loans that they took to use as leverage. So when the news leaked about Binance liquidating their position in FTT and also selling their equity in FTX, that probably set fear among investors, and they started withdrawing their funds from FTX, and that caused the problem that they got into because they didn't have enough cash on hands to actually complete these transactions, all because they were using all these funds as leverage to make bets somewhere else on the side. And to this, on November 10, SBF actually tweeted, "I'm sorry, that's the biggest thing. I fucked up and should have done better." And then one of the following tweets on the thread was, "My stances before, leverage 0x, USD liquidity ready to deliver, 24x average daily withdrawals. But the actual one was leverage 1.7x and the liquidity was 0.8x Sunday's withdrawals." The question is, how do you not know that you have 1.7x leverage compared to no leverage? And how can you go from 24x average daily withdrawals to just 0.8 Sunday's withdrawals? When you're running a company this big, you should be on top of everything because you're dealing with millions of people's funds, and this is a lot of responsibility. It also caused a sell-off in the FTT token, and the price went down from $22 to $15 on November 7, and then from $18 to $4 on November 8, meaning that now they won't even be able to use their FTT because if they sell it, it's not going to be worth as much because the price dropped so much, so they won't even be able to fulfill their obligations on the loan. And so since the deal with Binance fell through, on November 11, SBF filed for FTX.com, FTX US, and Alameda Research for Chapter 11 bankruptcy, and he also stepped down as CEO of FTX that same day. And one of the recent news is that FTX has been hacked and over $600 million worth of tokens were stolen, and some people say that it was even SBF himself who did it. And if you're wondering where SBF is right now, he is believed to be in Bahamas, even though rumors say that his jet flew to Argentina, but he denied those rumors. Supposedly all withdrawals on FTX and FTX US are now suspended, and it's also recommended not to use the platform either on your computer, and also delete the app from the mobile phone, just to be extra sure that you don't get scammed out of everything that you have either on your computer or on your phone, and just as extra security measure. And this also affected the crypto market because it was the second largest crypto exchange at the moment, and it caused some sell-offs for some tokens such as Solana that is highly associated with SBF, and some other tokens that he was supportive of. So it's going to take a while until the market finally calms down, and I highly recommend just wait it out a little bit. Don't rush into buying a lot of things, and if you want to still do the dollar cost averaging, but probably small amounts, don't rush into it. Let's wait it out and see what happens. Anyway, it's a crazy drama that's going on, and it's sad that millions of people are probably gonna lose their funds, but hopefully I hope that you guys can recover at least some of your funds. If you're lucky, maybe most of your funds or all of your funds. And yeah, it definitely outshines some of the Hollywood scenarios out there, mainly because it's happening in the real life and it happens so quick. Take care, guys. I hope you'll be able to recover some of your hard-earned money, and see you guys in the next one. I'm definitely going to be keeping you guys up to date on what's going to happen at the end.